Understanding that we have a quorum, so I would like to start a minute behind schedule, but as close to schedule as possible. So I am going to call the meeting to order.
Clerk calling roll on Chair Guzman.
Here.
Vice Chair Gonzalez.
Here.
Board Member Martinez. Board Member Pego. Board Member Smith-Fano. Board Member Weinberg. Chair Gutierrez. Vice Chair Ferrer.
Here. And I believe that Luz was going to try. Okay. To get in by phone?
I think you have a quorum with phone.
Yes, we can move forward. Next is the declaration of voting conflicts.
Do any of the committee members have any conflicts to declare? None, Mr. Chairman.
As we do in every meeting, I am going to remind the audience that this is the time for public comments. Should someone want to make a public comment at this meeting, please identify yourself and state so at this time. Otherwise, we will move on to the agenda. Having registered none at this point for public comments, we will move on to the agenda. Action item, approval of minutes. You received the minutes as part of your package. Are there any comments, questions, changes to the minutes as circulated?
Move the minutes.
We have a motion, a second. Any opposed? The minutes have been adopted as written. Marie, are we going to now have the external auditor step up to the plate, if you will?
Yes, sir.
Okay.
This is Mr. Bill Blen. He is our external auditor. He's the partner on our engagement. This is item B. This is endorsement of fiscal year 2014's year-end financial statements.
Welcome, Bill. Thank you for making it. I know it's a lousy day out there.
It is, but here I am. First of all, Mr. Chairman, committee members, I'd like to thank you for allowing me to come here today and also for allowing Moore Stevens Lovelace to serve as your external auditors. We want you to know that we take that job seriously and understand our role and responsibility when we perform the external audit. So what I'd like to do today is go through the required communications with this group as well as go over some financial highlights, and then I would open it up for questions. Obviously, we're engaged to audit the financial statements, which we've completed that audit. We've issued an opinion on those financial statements. I can tell you that is what is called an unmodified opinion. That's the highest level of assurance that we can provide you. We also issued our report on compliance over internal controls. We don't audit internal controls, but we review them for the purpose of doing the financial statement audit. And again, that was an unmodified report. In addition to that, we look at controls over compliance for your grants. In this case, you qualified for a Florida single audit, and we performed that single audit. And again, that was a clean report. The management letter as well. We had one item to point out in the management letter, and that related to the SOX report that you're now receiving related to your third-party service organizations. And as far as I know, everybody's received these documents, so that's just making sure that staff reviews those reports, and if there's any findings within those reports, that they get assurance from those service organizations that those things are corrected. And then finally, we had a new change this year. We've issued an independent accountant's report, which for the authority relates to your compliance with Statute 218 related to investments, and you did comply with those statutes. Our responsibility is to perform our audit in accordance with government audit standards, rules of the Auditor General. We've done so. The audit procedures performed include a review of the internal controls, as I spoke of earlier, and also we look at compliance. Board and management's responsibility is to provide us with accurate information, and they've done so to the point that there were no adjustments made or even proposed adjustments. And again, I take a second just to recognize staff and the work that they do to prepare for the external audit and the importance of that, and being well prepared and making sure that the information is in a condition, and it clearly is, that we are able to audit. Other communications, there's nothing else to communicate to you that isn't officially done through the audit reports. The individuals assigned, Marie is our main contact, and then we provide you with a group of government audit specialists. We're actually here very timely for the submission. We're within 5 months, and that's really very good timely reporting from a governmental entity. The report date was November 4th. Any questions about the communications? Seeing none, I'll move on to just kind of a high-level overview. So if we look at kind of a ratio perspective here, we see things are kind of on an uptick. That's good. So things are going down the right path. We've got the appropriate bond coverages and things here. We look at a healthy asset position, as well as obviously we have liabilities. The major portion of liabilities being debt. Obviously, the largest portion of your net assets being invested in capital assets or infrastructure, your roads, and so on. So again, this is just a high-level overview. Looking at your operations for the current year, we do see that there was a decrease, but that was really, you guys were anticipating that, and now you've had some changes to your total revenue.
Luz, welcome to the meeting.
Yes, that's fine, but just joined. Thank you.
Oh. That was just somebody letting me know. Okay. I was like, what happened? All right. And again, so if we look, these are just some graphics of the financial information. I don't want to take up too much of your time going through these, but I will open it up for any questions or comments.
Any questions or comments from the committee? Bill, I am going to ask Marie to quickly explain the drop in revenues just at a very, very, very top level from 14 or 13,
Certainly.
14.
We did anticipate for that, and we realized that it was a transition in fiscal year 14 with various new vendors, and we did provide for that in budget, and we did account for it. So it was not a surprise. Mr. Treasurer, this year we took an added step, and we actually produced the CAFR, this is actually the CAFR. We did it electronically. We passed out the keychains, so everybody has an electronic version of the CAFR. And we also this year, this is probably the second year in a row that we've done this, is the Popular Annual Financial Report, which is a citizens report. Again, that's on your flash drive. I just want to recognize my finance department. I think they did a tremendous job in getting the audit done in a timely manner. As well as the procurement department, who was also a big part of the audit process as well. So I just want to publicly acknowledge my staff.
You are right to do that, Marie, and I would like to recognize it on behalf of the committee as well, because both procurement and the finance areas always do an outstanding job, and in this particular case, they should be recognized for that effort. Any other item at this point related to the fiscal year 2014 presentation?
Mr. Chair, just need a motion to accept the report.
May I have a motion to accept as presented? Second, a motion and second have been placed. Any objections? Opposed? We have accepted the presentation as given by Bill. Thank you, Bill.
Thank you very much.
Thank
you, sir.
Marie, asset disposition issue?
The asset decision is in accordance to our policy. Anything that is above a certain threshold must come to the Budget and Finance Committee. I believe we just passed out a recommendation letter by our general area consultant. And in that letter, there were two items that they recommended for asset disposal. Either they're no longer being used or they were impaired. One of the items is the write-off of software, as well as acquisition costs related to land acquisitions that were on the books, and they do a review of the assets inventory on an annual basis. So they're recommending us to write those two assets off, those various assets off, totaling book value of $7.6 million.
Any questions concerning the proposed asset disposition or the components of that request? If not, I will entertain a motion to accept the recommendation for this asset disposition number. We have a motion and a second. Any opposed? Having none opposed, the motion passes. Marie, can we do a quick treasurer's report?
Did you want to take item D first, or
Actually, let's do that. Let's take item D first, because I know that some have to leave before this. We move on in the agenda, so that would be ideal. So let's take item D, if you don't mind.
Yeah, this is Action item for MDX procurement contract number RFQ 1406 for municipal financial advisory services. There's 3 actions that are being requested for consideration by this committee. The first one is the approval to deem the proposal submitted by Strata Hinojosa non-responsive. The second action item is the approval of technical evaluation committee scores and ranking of the responsive proposals. And the third item would be the endorsement of the board for board approval to select and enter into a contract negotiations with the number 1 ranked proposer. MDX received 4 proposals in response to a request for qualifications from Strata Hinojosa and Company, First Southwest Company, Northwest Financial Group, and Public Financial Management. As part of the compliance and responsiveness review performed on the proposals, 2 of the proposers were missing information documentation to demonstrate compliance with the pre-qualification criteria as allowed by the RFQ and consistent with our standard procedures. The proposals were offered the opportunity to submit the missing information and by an established deadline. North Financial Group was one of those proposers, and they submitted what the required information and were deemed responsive. The second proposal was Strata Hinojosa, and the information that they submitted was submitted past the established deadline, but also the information that was submitted still did not comply with the requirements of the RFQ in that it did not provide information to reflect the required years of experience for financial advisory services, for swap advisory services, For that reason, their proposal was not forwarded to the Technical Evaluation Committee for evaluation. Strata Hinojosa was notified of the status of its proposal and requested to address the Budget and Finance Committee today, as well as that in the meantime the proposal be evaluated. The proposal obviously was not evaluated, but they were advised that they could address the committee today as part of the public comments section in the agenda. In order to maintain the integrity of the process and pending any action by this committee, the scores that were provided by the Technical Evaluation Committee, which met last Friday, November 14, were not tabulated, and they will be tabulated either today or depending on the action that is taken by this committee. Any questions?
Well,
I'm sorry, Mr. Chair, if I may?
Yes,
I have
please.
a question.
Absolutely.
Thank you, Carter. Is Strata Hinojosa present to address the budget committee?
Yeah, Lourdes has arrived. In spite of the fact that we passed the public comments session, I will still allow the presentation if that's permissible. So yes, she is here.
Okay, thank you.
Okay. Lourdes, would you like to address the group before we have additional questions from the committee?
Good afternoon, Mr. Chairman, Vice Chairman, and members of the committee. My name is Lourdes Reyes Abedin. I work for Strata Hinojosa. I'm an executive vice president. I run their Florida office. Thank you for the opportunity to speak this evening or this afternoon regarding my firm's proposal to serve MDX as financial advisor. I have to say that addressing a board on this issue is a new one for me. I've been in this industry for 26 years, and I've never had a non-responsive proposal. So it's a little nerve-wracking, but I thought it was worth it for us to come up here and talk because I feel like we deserve MDX as a client, and MDX deserves us. We have, originally I was going to bypass speaking with the Finance Committee and accepting procurement's decision that we were non-responsive. But I couldn't get it out of my head. And so in reflecting one day, I said, yes, maybe we didn't put the references in the right form, but we do have a very strong team, very comprehensive. We had a misunderstanding as to the credentials that needed to be submitted for the swap advisory work. We had teamed up with a subcontractor who is known as one of the best financial advisors on swaps in the nation. We had a comprehensive team together, and we provided the credentials for the swap of the subcontractor that was a swap advisor, as well as the 2 leading bankers, which would be one for swap financial advisor and one for Strata Hinojosa. At a later time, we were informed that we should have also submitted the swap credentials for Strata Hinojosa. I'll never forget, it was September 24th, the day before my son's 13th birthday. It was Rosh Hashanah weekend, and we had a 2-day turnaround to go back to all our clients whom we had referenced, get clarifications on some of the references, and come up with references for 15 years. So imagine this, Rosh Hashanah, I have all my bankers up in arms trying to get this information. Our Peter Shapiro, who is our swap advisor, is working out of his closet because it's Rosh Hashanah and he's on holiday. A lot of the clients are out. A lot of the documents are in storage. Computers don't go back 15 years. So we did the best we could, and we provided the information. The bottom line is we do have the pre-qualifications required. We have put a very strong team together, not only to address the requirements of the RFP, but also to catapult MDX into its breakthrough with its strategic management plan. We are a visionary company. We are a small company, but we have earned the top transportation credentials in the nation. That is a big accomplishment when we are compared with all the bigger firms than we are. That's just to show you some of our transportation experience. We have been following MDX's finances for a long time. Estrada Hinojosa first served as underwriter to MDX in 2001. I was part of the financial advisory team that created MDX in 1998. I was one of the junior bankers in the financial advisor team. I'm sure my face is not new to you. We come to board meetings, we come to finance committee meetings, we come to planning and intergovernmental meetings, we sit through your strategic planning meetings, we have ideas, we have studied MDX, we submit proposals, we've submitted ideas. Even recently, we submitted a proposal for underwriter that was also deemed non-responsive because there was a request for a license that we were not required to maintain, and the word even started to get around that Estrada Hinojosa was not allowed to sell bonds in Florida, which was inaccurate. We just did not make a statement as to a Florida statute that existed that exempted us from having this license. But I let it go because I really felt in my heart that we could better serve MDX as financial advisor. And so this is why I'm here. MDX has a very big impact in our community. We're going through a transition phase. We have the MIC, we have new projects. We want to become a major transportation authority in Miami-Dade County. We have ideas on how to get new revenues. We have studied MDX's books. We are totally dedicated. So I am here with requesting that just as you have the authority to dismiss any proposal due to technical issues, is that really in the best interest of MDX? And is that really the spirit of the RFP? Or is it to obtain the best qualified, comprehensive team that MDX can get as a financial advisor to not only address the issues that MDX is facing today, but to help it navigate through our strategic management plan? So with that, I humble myself and I request that you please allow Estrada Hinojosa's proposal to be evaluated with the rest of the proposals submitted.
For your presentation, Lourdes. Committee members, are there any comments or questions concerning the presentation by Lourdes Reyes Abadin or the materials provided to you for this decision? Alfredo?
There's a statement made that they meet the experience qualifications. Do they?
The question was whether they meet the required pre-qualification. That's the issue at hand, that the information that was submitted does not demonstrate the years of experience. They could potentially have it, but they did not demonstrate it with the material that was submitted.
So you or staff agree that what was submitted to you doesn't include the required experience under the RFQ?
What was submitted to the agency does not demonstrate those years of experience.
Okay, thank you.
Mr. Chairman?
Yes.
I think you have, she wanted to ask you a question first.
Lourdes wanted, I'm sorry, Luz wanted to ask a question. Luz, are you still on the line?
Yes, I'm on the line, and I think Alfredo's microphone is off. I'm having a hard time hearing his question. I heard Helen's response. Mm-hmm. Yes, I had a question, and I was actually the board oversight at the Technical Evaluation Committee on Friday, and I don't know if I understood Ms. Reyes-Abadin's point correctly. Did she say that she actually did not know she was to present the qualifications until today's or the day before her son's birthday, etc.?
I believe,
what I heard?
and Lourdes may correct me if I'm wrong, that the statement made was that there was a misunderstanding as to how that information should be presented, and the correction was requested at a time when perhaps there was an issue with the availability of folks that would have to respond to that, the data, et cetera, et cetera, et cetera. But it was a misunderstanding as to how the data should be presented on the part of the responder, not on the part of the issuer of the RFQ.
Okay, there's a misunderstanding. Not that after 25 years of presenting proposals, you did not know you were to include letters of recommendation.
I understood it as a misunderstanding. Correct, Lourdes? Correct.
Mr. Chairman, as I understood what was stated, is that there was a submittal of the information of the subcontractor who did qualify, but the Estrada Hinojosa team itself did not fill, but the partner did. So then my question is not to you, but to the executive director. Well, you can pass it on to whoever you want to pass the question on to. As a member of this board, I always ask the question of the top executive who is responsible, because the buck stops with you. So I'm asking the executive director, is that and I again will repeat it, they did submit the information for their partner, as I understood it, but they did not submit the information for themselves for the 15-year record. Is that a substantive issue? Because if it is, then I think there's nothing we can do.
Mr. Vice Chair, I will respond in this way. The actions that staff is putting before you, and I have to be careful because I'm on the technical evaluation committee, so I'm waiting for this board, this action. But the actions that are being taken by staff recommended to the board are consistent with our policy and with previous actions.
Okay. So if I can take the consistency portion and on the record state that you feel that there is a substantive difference.
Yes.
Okay. I have no further questions.
Any additional questions from the committee members at this time? Then I will entertain a motion on this item from the committee.
So the first motion for clarification is approval to deem the proposed proposal submitted by Estrella Noche and Company non-responsive. So that would be the first motion if somebody cared to make it.
I would make that motion.
I have a motion on the floor. Do we have a second?
They had issues with
Any opposed? The motion carries.
Second motion is approval of Technical Evaluation Committee scores and ranking of responsive proposals.
Actually, that motion would require for me to open the scores and tabulate them. So if you want to move forward with discussion, and while I do that.
Move forward.
Let's move forward, and we will come back to that, if you don't mind.
And the third is the endorsement. We'll have to wait. Okay. Move on to the
before we continue, and I want to make this as a general statement. One of the things that we have tried very hard at MDX is to adhere to a standard of excellence with respect to process and the way we handle these matters. And we must continue to hold steadfast to those processes and those criteria. I will encourage this committee and the board to reevaluate going forward the policy and perhaps tighten it further, because the issue of substantive or not is very subjective in some cases, and that is a problem. So I would like to place it on the table that this is one of those other items that needs to be discussed at the time that we discuss the general policies of MDX. We always want the best vendors. We recognize Estrada Hinojosa as an excellent member of the investment advisory community, but we must adhere to the standards of MDX. So with that said, we may continue. Marie, may we entertain the Treasurer's Report presentation now?
Yes, sir. I'll be quick on the treasurer's report. We do have a presentation by Citibank. Norm Pellegrini is here, who was our senior on the last transaction. The treasurer's report is for the 4-month period for October, fiscal year 15. As you can see from the report, we're about $1.4 million below on our toll and fee revenue. And again, as I stated in previous meetings, as you recall, our revenue is recognized based upon lane exit, as well as when we actually generate invoices. That's when we recognize revenue. So there's a little bit of a lag for the 4-month period, and we anticipate by next couple of months it'll be caught up. On the expense side, nothing really significant that jumps out. I believe the legal, as we stated in previous meetings, is over budget about $400,000 year to date, and that's really relating to the current litigation. Interest expense is below the budget by $1.5 million roughly, and the majority of that savings is really due to the refinancing of Series 2014B. Overall, our net revenue is pretty much about where we anticipate where the budget is. It's $14.7 million, about break even to the overall budget. With that, I'll ask Norm Pellegrini to begin his presentation.
Welcome. Norm, how are you?
I'm well, Mr. Chairman. And members of the committee, thank you very much for this opportunity to appear before you. And I also want to say thank you on behalf of Citigroup, as well as my other co-managers, which included Morgan Stanley and RBC and Rice Financial, for the opportunity to represent you on the refunding that we were able to accomplish, I think, in good fashion back in September of this year. What I'd like to review in this presentation is to go over a transaction summary, give you a flavor for what the market was at that point in time when we were pricing the financing, review the schedule and the results of that pricing, and then go through a brief discussion about the analysis as far as the distribution of the bonds are concerned. As you can see on this page, it's basically a transaction summary. On the left side, it really states the facts regarding the bonds that we were funded. They were the 2005 Series A through E and the Series 2006. On the right is basically a summary of the 2014 refunding bonds that we just accomplished back in September. In terms of a market overview, I think, as Marie had pointed out in the board meeting back in September, we had scheduled to price this financing the last week in September, but because of market opportunity and because of a heavy calendar during that week, the decision was made to accelerate it to the week of the 15th, and specific pricing was scheduled for September the 17th. This calendar here shows you the economic activity that was taking place that week. There really wasn't much going on except for a meeting of the Federal Reserve Board, and we felt it was important that we got out before the Fed made its announcements as to what it was going to do regarding interest rates that Wednesday afternoon. We just felt that the market would remain stable. The market had pretty much anticipated what the Fed was going to do, but we didn't want to experience any form of surprises that afternoon, and that's why we chose the morning of September the 17th to price the transaction. The supply for that week was, in our world, which the municipal world nationally, was relatively low, $4.4 billion, and those are just a sampling of some of the financings that were being priced during the week of September the 15th.
Was the 4.4 for that day or for the week?
For the week. It was for the week, right. No, not that day, Mr. Ferre. The next chart is goes over what we refer to as the MMD. It's municipal market data. It's an index. This is an index that's comprised of AAA quality GO bonds. And in the municipal world, everything is priced off of this index. And the first graph that you see up there basically shows you how the index has trended from 1986 until 2014, and specifically September 19th of 2014. As you can see, there's pretty much a steady downtrend with some volatility in that graph.
If I may, Mr. Chairman, was ours the third largest of that week?
Yes.
Fourth. We were the fourth.
Yeah.
No, we were the fifth. Yeah. Okay. Oops.
The fifth largest, I think. Sorry about that. On the chart below, that basically shows you the percent of time MMD on September 19th, 2014 has been lower since 1986. And just as an example, if you look out on the far right of that chart and you look at the 30-year maturity, that 4.1% basically is saying that MMD has not been lower 4.1% of the time since 1986. So
wow.
That whole point there is that you hit a perfect market.
Wow.
Right. Then if you go to the next chart, this basically shows you MMD since January 13 until you issued your new money bonds, which was in June of 2014. And from May 13th to September 13th, you saw some extreme volatility as far as the municipal market was concerned. Interest rates during that period of time increased 172 basis points. And then some stability hit the market. And then from October 13th to June 14th, when you issued your new money transaction, the $314 million, the Series 2014 A bonds, the 30-year MMD decreased 113 basis points. So you were able to access the market at a pretty good time. And then from that point to when you made the decision to issue the refunding bonds, the 30-year MMD decreased another 28 basis points to when we issued the bonds on September the 15th, 2014. As far as the schedule is concerned, regarding the pricing, we mailed the preliminary official statement on September the 10th. I initially indicated to you that we accelerated the financing to September the 15th from it being scheduled to be on September the 24th. And the reason we did that is during that last week in September, you could see those three humongous transactions that were on the calendar, and we did not want to compete with them. So the point there is that we accelerated it to a time when there was a relatively light calendar. People were anticipating your bonds coming to market. When we did accelerate it, we had investor calls the day before. Marie spent her entire day talking to the investors that you see on that page there under September the 16th, and she did a phenomenal job as far as explaining the credit and answering all the questions that they had. And then we priced on September the 17th and then closed October the 15th, which was a delayed closing. Now, this is an interesting chart from the standpoint that on the day that we went to market, you see the MMD in the left-handed, on the far left, and you see there that the interest rates of MMD at that point in time. When we went out to market, we basically priced the bonds, and the important number here is the spread to MMD. So on 2015, MMD was 13 or 0.13%, 13 basis points. And we went out with a yield on your bonds 25 basis points greater than that at 0.38. And if you go down the total maturity column, you could see the spread there. On the 30-year, it was a spread of 75 basis points greater than what MMD was. When we went into the marketplace, there was such investor interest in this bond, in these bonds, that we were oversubscribed significantly, in some cases 10 times, which allowed us to reduce the initial yields that we went out with by, as you can see on the right-hand column, 18 basis points in the first maturity, all the way down maturity by maturity to 18 basis points on the last maturity. So your final pricing on your longer maturities was a spread of 57 basis points over MMD. Now, to put that in perspective for you, your credit is, in my opinion, undervalued as an A minus, A3, A minus, as I know you would. This pricing is indicative of a double A minus, double A3 credits. So you just hit the market perfectly. She did a great job in terms of explaining your credit and what your mission was. And, all I can say to this is congratulations.
Thank you, Norman. Once again, I know that we've mentioned luck in every one of these presentations. I will remind everyone that luck is when opportunity meets preparation, and that this group and our finance team and all of the folks that worked on this transaction made it possible for this perfect, and I'll call it perfect storm, although it wasn't a perfect storm, for this perfect condition to exist. So congratulations to all involved. And thank you.
Mr. Chair, may I ask a question? Norm, what has happened since? In other words, because the market kind of stayed steady for a while.
There's more.
I thought you might ask that question.
There's more opportunity.
Mr. Ferreri. Yeah, it has. But, there are no guarantees in this business. But it has.
We did the right thing, and I'm not in any way double. I'm just curious to know, had we waited a month or two, what would have happened?
Well, look, I've thought about that. I really have. And I think what was really key here was, look, Marie's great. I think Citigroup and our managers are really good. No. The point I was going to make was that, you got to be lucky too, right? Yeah. That's the whole point. The point I think that happened here was by accelerating the transaction, by being in the market when there was limited supply, by everybody anticipating these bonds coming to market. And look, it's a toll revenue bond, that there aren't many out there. You really, you nailed it as far as timing and everything else. And I think that's what did it as far as you getting an extraordinary price.
About it. Now answer my question.
Yeah. No, answering your question is the market has remained stable. But I do think that if you'd have gone later, the interest rates you would have gotten on these bonds could have been slightly higher because you may have been competing with more supply.
That's my conclusion, but I'm an amateur at this.
And I think you thought that through logically. I think that's a very.
We want to talk a little bit about what the swap market was doing at that point in time, as well as negotiations on the swaps, and how that factored into pricing. I mean, we're looking at one aspect, which is really what the market was doing, but the swap market also had an effect at that point.
Yeah, well, it did because, as you all know, we were trying to take off 2 swaps at that point in time. So this was, and I didn't really want to get up here and talk about that, but, you're at a point where you've really simplified your capital structure. So, it was complicated to make sure that we were, this was being done at a time where we could get the right price for you in terms of a termination payment, on the swap. So, both of them were kind of interrelated and interdependent, and we we were lucky, but it was also good execution.
Mayor Ferrer, we're also continuing to watch the market because, as I've expressed to Marie, and I know Marie is dealed out at this point, but there still seems to be windows for opportunities, and we will continue to monitor that very closely.
Mr. Chairman, there's another a little bit more as far as this presentation regarding the distribution analysis. I mean, I can go over that, or you guys can just look at it.
No, please, if you don't mind,
sure.
Quick overview. We're still on target.
Right. As I said earlier, your management group included ourselves and Morgan Stanley and RBC and Rice Financial. And then when we went out to market this, we set up on the wire that we sent out that the orders that would be filled would be in a certain order. So first, anybody that came in that was a Miami resident that wanted to buy these bonds, they would have, whatever maturity it was, their order would have been filled. So that was the first priority in terms of filling bond orders that were coming in. The second was anybody that was a resident of the state of Florida, if they wanted to buy any of these bonds, then their orders would be filled. Then the third was net designated, and all that means is that these are institutional investors coming in and putting in an order, and they're usually large, big block orders, $5 million or more. And because these institutions are loaning you the money, they feel they have the right to designate which firm within your management group or which firms in your management group will receive sales commission. And then you had member orders, which were just the firms themselves, ourselves, Morgan Stanley, RBC, to put orders in for stock. Now, I said that on a net designated basis, institutions had the right to designate which firms receive sales commissions. They do, but it's within the framework that you guys set. And that framework was basically that there had to be a minimum of 3 firms designated, which means that 3 firms would share in sales commission. No one firm would receive more than 60% of the sales commission. Each designee must receive a minimum of 10%. So if a firm was designated, they got a minimum of at least 10%. And then also the MBE firm, in this case, had to be designated, which was Rice. The next summary is basically orders and allotments by type. You had 43,850,000 retail orders, and because those retail orders were in maturities that retail was buying, you had more orders than you had bonds to allot. So the allotment was around 4.6. Institutional orders, $2,750,000 almost, which was just extraordinary. And you had $258,400,000 to allot. Member orders, you had $95 million. All of your managers wanted to show you that they were supporting the transaction, and they were allotted $3,360,000. And then you see orders by underwriter. It's not uncommon, believe me when I tell you this, for the senior manager to take in pretty much all of the institutional orders. I mean, it's not just Citigroup, but Morgan Stanley, when they ran your last transaction, they received most of the institutional orders. And remember, that's where you have your designation policy, and all of your managers are participating in the economics of the transaction. Here's a list of all of the institutional investors that participated in your financing.
You got some big guys there.
You absolutely do. And, that speaks for itself. You had 56 institutions that put orders in, and you should be pretty proud of the organizations that you're running. Everybody really wanted to own this bond. And then here's a summary of orders and allotments by maturity, and it shows you the subscription. So in total, your transaction was oversubscribed by almost 11 times, which allowed us to come back and reduce those interest rates by the spreads to MMD that I referenced earlier in the presentation. So again, congratulations. And in conclusion, the market conditions, they were, I think we hit it at the right time. They do remain stable. 10, almost 11 times oversubscribed. You had almost 44 million in retail orders. It was the market and the interest in your bonds that allowed us to reduce those interest rates to the levels that we did. And I think what you should be most proud of that you really did secure pricing that's comparable to AA minus, AA3 credits.
Yeah, we expect that to be a sign of things to come.
Right. Well, look, it's been a real pleasure. I think I told the board the last time I spoke, I have a long history with this agency, and it's been a real pleasure to represent you. And I thank you so much for allowing us to do that. Great working with Marie Javier. Congratulations.
And congratulations to all of you that participated in helping us get this through. And again, great timing, great preparation, and good opportunity.
Absolutely. Thank you.
Thank you, Norman.
Thank you, Norman.
Mr. Chair.
Yes, Luz.
You, as great as you are, you actually missed a whole other second part of that quote. Actually goes that luck is what happens when preparation meets opportunity, and the problem with unlucky people is that opportunity is dressed in overalls and looks like work. I think our finance team has never been afraid to get down and dirty and work. So kudos to Marie and Randy and everybody. That's why we're so healthy financially.
Point well made. Point well made. Okay. Are we ready to accept the presentation from Norman and the Treasurer's report as presented? Do we have a motion? I have a motion. Do we have a second? Any opposed? So the Treasurer's report has been accepted, and that includes the presentation by Norman on the 2014B.
Mr. Chairman, before we go to the next item and before we lose some of our stellar financial people here, since the market has held, what would be the next opportunity? I guess is through you to Marie. What would be the next opportunity for us to go to market on the remaining approved but unsold? I know we have the arbitrage issue and all of that, but I'm sure we're keeping a steady eye on when that would be.
Certainly. The refunding that we're currently looking at potentially is Series 2006, what's remaining out of 2006.
Sorry?
The 2006 series. We're monitoring that. It's an advanced refunding at this point in time. July 1st, it would be a current refunding. So we are evaluating that particular bond series.
How much is that?
It's about $129 million that's remaining.
And you're saying that you're reevaluating. Does that mean that we could go to market on that in the next 3 months or 4 months?
I think if it comes into the targets of present value, somewhere around the 5% range is where the policy is. Below that, it won't make any sense because of the arbitrage.
Right.
But again, the market shifts back and forth. I think our official statement is pretty fresh. So we put a lot of work in the last 2 years in the official statement. It's quite a thick book, and I think we passed it out to everybody last time. So again, we are monitoring for opportunities. Okay. The only other item I'd like to bring up, it was an item that the Madam Chair brought up at the last Budget and Finance meeting. She had asked the Bond Counsel about liability, and the response was the board is not liable. And I think he answered the question. Our bond counsel, who is excellent, answered the question. But I think the way the question was phrased, the board does not have liability for financial results. The liability really comes in from a disclosure perspective. Have we disclosed everything within our official statement at a point in time? The official statement does say that nothing's guaranteed. There's forecast and there's assumptions based upon that. But the reason I bring that discussion back is there was an article in the Bond Bar that I had Maria Lisa send to everybody. And it was an interesting article, not that the investors are going after governing boards, but the SEC, from a regulatory perspective, is really stretching their regulatory authority, so to speak. And even though at the end of the result a board may not be responsible, going through that process is very painful. I think the comfort that this board has is that you are represented by, I think, a very good management team. You have, your financial advisor, your bond counsel, your disclosure counsel, your underwriting team. So I think you should take comfort that what we do is we follow the requirements to the letter of the law. So we do make sure that we operate within that. But I did want everybody to kind of just, if you have an opportunity to read the article, it was an interesting article on how they're really reaching to not just elected boards, but volunteer boards. So.
And I thank you for sending that article to all of the board members, Maria, and also for reminding us that there is a liability on the part of board members, be it to bondholders or to regulators. And that is one of the reasons why it is critical that everything is done exactly as we state in our policies, procedures, standards, etc. So I appreciate that. All right. Are we ready to revisit item D?
Yes, sir.
Can we reopen item D? Do I have a motion to reopen item D, please? Second? Any opposed? Let's reopen for discussion.
After tabulating the scores submitted by the Technical Evaluation Committee for the 3 responsive proposals, First Southwest was ranked number 1, Public Financial Management was ranked number 2, and Northwest Financial Group was ranked number 3. The item for consideration is the approval of the technical committee of scores and ranking of these proposals.
I couldn't hear you, Helen, so can you repeat, please, the 3 firms again in their respective rankings?
Rank number 1, First Southwest Company. Mm-hmm. Rank number 2, Public Financial Management. And rank number 3, Northwest Financial Group.
Okay. Do we have any discussion on this item?
I think we should get a copy of the tabulations.
Absolutely.
I don't need them now, but I would like for the record.
We would put it together. We would put it together and send it to this committee, and it will be part of the board agenda as well.
Where you want, Mr. Chairman?
Are we ready to vote on this? If we are, do I entertain a motion to move forward with a vote?
Move forward to motion to move forward.
Second on that? We have a motion and a second. Any opposed? The motion carries, so we have awarded this to the highest ranking. And we also, now we need a motion to endorse the board approval and select and enter into a contract negotiation, with the number 1 ranked proposer, so I got a little bit ahead of myself. So I'll entertain a motion on that. So moved. A second? Second. Any opposed? Motion carries to move forward with the contract
Mr. Chairman,
negotiation.
if I may, before we close this item.
Yes, ma'am.
Just to clarify 2 things for the record. To address Mayor Ferrer's concern about substantive matter, the substantive matter on this particular instance is that since we require that the prime have those years of experience, if we allow for the sub to meet the requirement in this instance versus the prime, the potential of those who didn't submit a proposal because they were following those requirements.
Got it.
So that is the substantive matter on this particular
I just
one.
wanted it on the record. That's
Okay,
all.
there it is. And the second matter that I wanted to also address, just to keep the record as clean as possible, is that Strata and Hinojosa, when they submitted a proposal for the underwriting team, were not deemed non-responsive. They were evaluated, they just were not ranked high enough to be selected for the underwriting team.
Thank you, Helen,
Thank you,
for both clarifications. I appreciate it. Okay, informational items. We have a work program contingency release through October 31st of 2014, which is presented in the handout, and you
Presented in the handout.
and it's
Mr.
simply
Chair.
an informational item.
It is an informational item. I only have one item that I do want to just bring to the attention of the committee. And as everyone knows, Friday night we went live on 836 and 112. And as of today, everything is moving smoothly. The issues that we're looking at is we've gotten very good response on our Advantage program, which is our discount program that we launched back in July. Starting in January, we're going to start signing up additional folks who will actually get a cash rebate. The reason I bring that up is because since 2007, when we did the master plan for MDX, I think at that time, Madam Chair, you were chair, we started having conversations with the Port of Miami to see how we can engage the port and be freight friendly on our facilities. At one time, we tried to do a freight-only corridor. We had Dr. Poole look at it. I've had multiple meetings with various port directors on how to ensure that as we move forward with the MDX program, that the freight industry is viewed upon in a favorable manner. The reason I'm bringing it up to you is we've gone live, and I think we've gotten the data now. And Marie and I are looking at it. I'm looking at it with the engineers, where we can analyze and make a proposal to this board that we believe will be, conducive to ensuring that business in Miami thrives, that our connection between our airport and seaport thrives, and that we don't have any unintended consequences because of moving forward with closing our system. I bring it up to Budget and Finance because we want to put a plan together. We'll take it to Policy and Planning. We'll bring it back here if we have to, and we would like to take it then to the board for implementation. It has nothing to do with the Advantage program. That's for our commuters. It's more for the commercial freight traffic. We've put our money where our mouth is for many years because of our construction projects, but as it relates to our closing of our system, we want to make sure we address it correctly.
I think that this committee would openly endorse anything that would be to the benefit of the logistics and the commercial transport industry. It is a way to increase business activity, and therefore we would be delighted to entertain the proposal and delighted to endorse it for further presentation to other committees and to the board.
Thank you,
Mr. Chairman.
Thank you.
Yes, sir.
I just concluded yesterday 2 days of discussions and hearing at the Florida Transportation Commission. And I wanted to share with you just two things that are heads up for us. One is that all of the money is going into Central Florida and North Florida. There's nothing for Miami and Broward and Palm Beach. I mean, nothing. It's all Central Florida, Tampa Bay area to Orlando, Central Florida. I mean, and we're talking about not billions, tens of billions of dollars in the next 5 or 10 years. The second thing is that the managed lane program is moving along very, very quickly. And they're now expanding it to Jacksonville, I-4 corridor, Central Florida, Tampa, and we're talking about $3 billion worth of construction. I made a point that in South Florida, the only east-west that is being done is already been done, which is 595 in Broward, and there's now some discussion about 826, which is the Palmetto going east-west to Golden Glades. But that's it. So, and that there's no reason why the department can't help MDX and others, if the county or whoever wants to do these type of managed lanes on an east-west basis. We have a problem as you go south. There is no east-west managed lanes. And so they're very aware that this is a discussion item, and I just wanted to share that with you.
Thank you. It's unfortunate about the news with respect to dollar allocations, although not unexpected. And the managed lane issue is something that we certainly need to continue to support and explore, given traffic patterns in this area of the state. So thank you, Mayor Frey. Announcements with operating committee meeting on 12/2 on December 2nd at 10 a.m., I believe in this room, and the Board of Directors meeting on December 9th at 4 p.m. in this room. And other than that, at this point, I will entertain a motion to adjourn. So moved?
Second.
Second. All in favor?
Aye.
We have adjourned the meeting.